afternoon, everybody. I think most of you know me by now. My name is Andy Kyzyk. I work for OTC Markets, and I'm going to give a presentation. When I'm complete, I'm going to introduce some of our team, because I think that there's a couple of important elements that are part of the process for fundraising. What we tried to do today, we thank you for your custom in coming here today, because I think that we've tried to assemble the entire process. How does it work? What's the plumbing of this process? And I'm going to talk about OTC markets and how Reg A will trade, but I think it's important to understand a couple of things. You know, why does a company really want to raise money? Why do they want to be public? And when you go public, you know, you can do a Reg A, you can raise money, but how do you exit? How do you leave your investment or repatriate your capital, okay? And I think that one of the things that's interesting, and I've heard a lot of it, you know, Reg A doesn't work, you know, Elio doesn't trade. Look, I have a very simple outlook on the markets. The markets are fair, the prices are there, okay? You can execute the stock at whatever price you want in a dealer market. You can get in, you can get out. And to make that plumbing work, that's what our job is. So I've been with OTC Markets for, I'm going into my 10th year now. I used to run the international division. In this last year, I now run what's called advisory relations. So I work with advisors, legal, investment banks, transfer agents, trying to figure out how to get everything to work properly where there are problems. And I have to tell you that when I told my friends in early 2007 that I'm going to be coming to what was then called the pink sheets, they said, "You're crazy." Okay? The pink sheets, that's that dangerous place. That's that Wolf of Wall Street place. That's the pump and dump place. That's where I can't get traded. That's where the broker rips me off. Well, what really attracted me to the process was that, you know, I met Cromwell, I saw what was going on, and I saw that there was a need. I came out of the New York Stock Exchange, then I went to Spear, Leeds and Kellogg, which is a big specialist firm on the New York Stock Exchange. I was at Walter Frank first. We got sold to Goldman Sachs, and I spent some time at Goldman and at Spear, Leeds. And it was an inherent problem that issuers had. How do I get investors? Why don't they trade my stock? And how do I increase my visibility? When I talked to CFOs, they said, why are they selling the stock? Why doesn't it keep going up? So to kind of address that, I saw that Cromwell was putting together a really good plan to say, what's the basis of successful company execution? Why don't, you know, what's it all about? It's really about transparency and information, okay? So I'm gonna kind of use those to be there, but before I get started about the benefits of going public, I just wanna throw out some statistics. These are courtesy of Chris Pinilla at Vintage, okay? So he's been tracking Reg A. So these are statistics as of the third quarter, as of September 30th. I'm just gonna read them off. I didn't have time to put a slide together. The number of 1As filed was 148, okay? 77 offerings under Tier 1, 71 under Tier 2. At least 49 1A offerings filed confidentially. Now, 26 of those 49 have moved forward with a public process. Now, of those, 104 were qualified, representing 74 different companies. The average amount of time for qualification, about 100 days, so, you know, 3 months. Of the 74 that were qualified, 29 were Tier 1, 45 were Tier 2. Average offering, Tier 1, 9.5 million, Tier 2, about 28.9 million, okay? And maximum raise sought approximately 2.8 billion. Maximum raise sought by companies that were qualified, about 1.4 billion. Average cost based on disclosure for Tier 1, 160,000. Average cost to come to market under Tier 2, about 870,000. You know, if you guys give me your cards, I'll email this to you. Chris is great at Vintage. Vintage has kind of been starting to put together some tracking. The industries where it's been represented is service industry, about 25%, business software, financial, health, amusement, recreation, about 20% in real estate, combination of commercial / what we call REIT, and then banking, financial, around 8%. So I know that's a lot to kind of take in a minute, but we're starting to see some kind of demographics shown here, and I think Richard alluded to that before. People don't understand it. So what's our role and what do we do? Let's talk about the benefits of being public and how do we get there. You know, we're the plumbing that lets you sell the shares. So when I think about Reg A, I say, there's no value unless you have some kind of price on it. How do you create price? What's the visibility model? If you want to be public, you got to be able to tell your story, okay? What's your valuation? Why become public? There has to be some creation there to give your employees a value, to deposit their shares, to have personal wealth. What do? And the benefits of being public are to tell your story, find a way to raise capital and expand. In terms of liquidity is a function of supply and demand. I hear it all the time. My stock doesn't trade. Why? Well, if you have 10 million shares and 9 million are controlled, you have 1 million in float. Not everybody's going to be turning over the shares all the time. So what's the percentage of volume? The volume is a percentage of shares out. Small company problems are there. We have not had a small company capital formation process in 15 years. Okay, I started in the market in the late 80s. 2000, early 2000s is when small company capital formation kind of slowed down. And one thing that's important to note is that when you look at OTC markets, we have 9,700 quoted companies. The aggregate market cap is $14 trillion. We're like twice the size of NASDAQ in market cap, okay? That's twice the size of NASDAQ in market cap. Not in terms of liquidity, the smaller companies. When you decide that you want to go public, I hear this a lot. Well, let me just go to NASDAQ. Let me just accelerate my process and go forward. You get a banker, he sells your deal. What happens? 6 months later, the book dries up. A couple of months later, the market makers fall out. A year later, you're calling me and saying, I'm getting kicked off NASDAQ, I gotta go back to the OTC. And I wanna talk about the cost and complexity of being exchange listed versus on our market. So what's really the basic principle and why is it important? You have to have confidence and trust. Why does a company get a valuation? Because there's a perceived ability that you will execute your business plan and I will invest in that future, okay? And how do you build confidence and trust? With transparency. And it's most important is transparency and communication. That what are you doing? What's your financial and corporate press releases going out to the market so they can make a judgment to analyze value and trade your shares, okay? Before I get into some of those details, let me give you a little more demographics of who we are, what we do. OTC Markets is a publicly traded company, ticker OTCM. We've listed ourselves on OTCQX. Okay, I'm not here to market our company, I just want to tell you that. We have 3 business lines. We have trading services, which is OTC Link. It's a registered ATS, which is an alternative trading system. It's SEC regulated. And we connect leading broker-dealers to provide liquidity execution services for our markets, okay? The second business we have is market data. As you have markets, you have to move that data out. The quote information has to go out to Bloomberg, to Reuters, etc. And that's what you see on your screens when you punch it up. The third business we have is corporate services. And corporate services is really the issuer side of the business, the listings business. What do we do on an aftermarket basis? And we qualify our markets into 3 categories. We have OTCQX at the top, OTCQB, and the rest is pink, okay? So corporate services provides better solutions for engaged informers to actually get investors to trade. So a little bit about QX and a little bit about QB. When I joined Cromwell, we were launching QX, and really what we did is we really wanted to create a process that provided high financial standard with a compliance wrapper and the ability to have information disseminated to the U.S. broker-dealer community and the financial services. So if you think about what NASDAQ and New York Stock Exchange do, you file your papers with the SEC, you hire your lawyer, you pay your lawyers a lot of money, and the information gets disseminated and hits the tape. Well, if you're not SEC registered or traded on national exchange, but you're here, how does that information get out? And what we did is we put in a lot of information, because if you think about why we tiered our markets, you have QX at the top, which meets a financial standard. You have QB, which is a venture market, which is a compliance standard, where the companies have to actually give a management certification to the shares outstanding and who the controlling shareholders are. It's a venture market with a low financial threshold. And then you have pink. A lot of pink gets pushed down, and we subcategorize pink with nice little monikers. They could be pink current, you could be limited, you could have a stop sign, or you could have a skull and crossbones. And that's based off the disclosure you provide. If you're late in your filings, you're dinged, Okay, if you're a pump and dump in marketing, you're going to get a skull and crossbones. We put warning labels on the securities people buy, and the belief is that when you segment this large pool of securities, you can't eradicate fraud that's out there, but you can slow it down by requiring those corporate issuers to provide more information to the market, right? So people are very skeptical when they buy stocks. I hear it all the time. Oh, it's the penny stock market. Well, you know, what's the basis of that, and what differentiates our tier system from what is the bad part of OTC? Let's step into talk about the trading model, okay? The OTC Link ATS owns and operates Dealer. Dealer is the trade book. It's an electronic trade book, and we're a dealer market. And basically what we do is we have a system where brokers can quote the shares and communicate with each other to get the price that you want to execute. And they compete on cost, execution, and liquidity. That's what they do. The market makers are registered, FINRA registered market makers. There's around 103, 109 of them. And basically what they do is they represent the interests of the buyers and the sellers. They do not work for the issuer, okay? Issuers constantly call us and say, I want to talk to my market maker, what's he doing in my stock? He's representing the buyer's interest or the seller's interest, okay? What's different about our market than an exchange is, let's talk about cost and complexity. On average, it costs around $2.5 million to go to NASDAQ, okay, or New York, okay? And that has to do with the lawyer, the accountant, the filing, and then the ongoing responsibility that you have to do after you get your money. So you do an offering, then you still continue to pay those costs, okay? That one-size model doesn't fit all the issuers. When you get to small companies, they need different process. The dealers are liquidity providers. It's a negotiated trade. You have a quote book. Those quotes talk to each other and brokers post the trade. It's a slower market. The number of trade counts is lower because it needs a lot of support to trade. Let me just jump over into what we've done with our tiers. We've got QX at the top, and we have QB, which is our second market. So let me just kind of jump into that a little bit. I got some notes. I might skip over some slides, but QX is the highest financial standards, and it's got reporting requirements. Typically, when you look at what the requirements are, there's a minimum 10-cent bid price. There's no penny stocks. And what penny stocks are defined by the SEC as is a company must have net tangible assets of $5 million or less for 3 years, or $2 million for more than 3 years, or revenues of $6 million for any 3-year period, or a $5 bid price plus a net income of $500,000. Okay, I hear all the time that's a penny stock market. You know, shares are under $5. There is a test, and it's based on net tangible assets. There are no penny stocks allowed on OTCQX. There are no shells. There's no blank check companies, no bankruptcy. So what we've done is we've moved the better companies out. There are great small companies that are publicly traded, okay? They need to be distinguished from the others. QB, our venture market, was just launched recently, and in the last few years, and last year we right now we have about just under 1,000 companies on QB. Okay, the key to QB is it just has a 1 penny minimum bid, but the key to success is the compliance process, where we have the companies issue a certification, publish it in our system for distribution to the broker-dealer and financial trading community, and that really talks to who are the controlling shareholders and what are the shares outstanding. Okay, it's funny because we come down the process with these companies, and then we say we need the certification and you need to post it. If there's a problem that I smell with the company, that's usually where the process stops. Okay? Most companies that aren't worried about it provide good disclosure. Why do you want good disclosure? You want to be able to analyze value and trade those shares seamlessly, have good information, just as you would on a national exchange. Okay? Now, who can qualify? Any SEC reporting company can qualify. Okay? Reg A reporting, we have a Reg A reporting standard. And just for those of you at the end of this, I actually have a ramp-on guide for QB and QX right up here, which tells you how to do it, how to get through it, and it's really easy. We have an international standard, we have a banks standard, and we also have an alternative reporting standard. So there's lots of choices to fit in the box, okay? Basically, one thing I want to mention about QB and QX is that we want to get as many companies in there as possible. Why? Because if you look at the value chain, there's a broker-dealer community. That broker-dealer community has their own compliance groups, and those compliance groups, as was mentioned earlier, have restrictions on the types of securities they want to trade. And those restrictions actually will say, you know, I'm not going to trade OTC. I can't deposit it. I can't clear it. It's a penny stock. Well, QX satisfies that recognition. And you know, I saw a note from UBS and from Credit Suisse that basically outlined what the penny stock rule is, and that's their baseline decision. What we've done on our market data division is we've created a compliance data file where we take all the companies, we segment them, and send the report out to broker-dealers twice a day to help them divide how our markets are set up so we actually do their due diligence. It really expedites their process to do that. Some of those firms have their own know your customer rules. You know, some say you have to have an account with us, you have to have a minimum account, you've had to have an account for 6 months or 200,000, and we'll take a quick deposit of OTC securities. Morgan Stanley, Goldman Sachs, E-Trade, UBS, Scottrade, now TD Ameritrade, they all trade in our market. They're all broker-dealers, registered broker-dealers. Let's talk a little bit about Reg A+. And I'll pull up some more information about it, but I think the thing to remember is that we're the exit strategy. We're the ability that gives investors the ability to sell their shares in a public market, in a publicly quoted market. So when Elio launched their process and executed and closed their escrow, you know, in the close of Fund America, they transferred the book over to VStock. Yoel and Seth talked about the issues of deposit, getting it into accounts. The number, and that could be corrected, around 6,000 investors were in the stock, and around 1,200 or so had their shares deposited to a broker-dealer. Those shares are fully tradable on the OTC. The shares have a market. I mean, the share price fell. We mentioned it earlier today, but I took a snapshot of the market maker book. I can show it to you if you want. We have approximately 10 broker-dealers quoting that stock. Okay. If you want, I could just jump out and give you a quick show. But I think what's important to understand here is that, you know, brokers continue to trade the stock. Markets will continue to support the price until there's more sellers than buyers. We're not in the business of the valuation. We're in the business of keeping the plumbing working, allowing broker-dealers to have transparent information to be able to trade. Okay. So here's the book for Elio. Real-time quotes. Brokers including Citadel, Knight, Arxis, Canaccord, Cantor, AX, Stockcross, Hambrecht, Net1, G1, E-Trade. So this is the market, and you know, it's 24 by 50, 100 by 4,700, and what you have is this is real time. Okay. Companies on QB and QX get to disclose real-time quotation. There's no other market that I know that gives you real-time quotation. Okay, real time. If you look at your E-Trade account, put it in order to buy or sell, that's going to change in a flash right before your very eyes. You have to pay Bloomberg or Instinet or Reuters to get this. Okay, we provide this for QX issuers and QB issuers. Okay, so I think that, you know, if you look at, let me go back to this. You know, what do you need to have to be a Reg A issuer? You go through the process, you convert it. We have a listing qualification process. Okay, the process is pretty quick. We look at the offering document. We want to make sure that you qualify under the listing standards for QX. Elio did. The process moved along. A couple things I want to mention, you know, as a company has their 1A and they do test the waters campaign, if there's changes, those need to get added back to the SEC into the comments. So there's several tiers of comments that have to go through. Everything needs to be updated and transparent. It was mentioned earlier that everything needs to match. I think in Darren's presentation, when he was talking about marketing earlier, everything needs to match. We review it through a compliance process. You're required to have a sponsor, okay? We were calling them DADs, Designated Advisors for Disclosure. We're transforming that into calling them QX sponsors going forward. It's an initial introduction letter that the company qualifies to meet the standard to be on QX, and it's a one-time process. We don't require companies to do it on a regular basis, on an annual basis. We just made that change. Actually, we just made it recently to go into effect on the 1st of January 2017. And you know, again, the standards are pretty clear. No penny stocks, no blank check companies. There's got to be a minimum 10-cent bid, a financial standard. And best practice is always talk about independent directors, audit committees, and majority of independent directors. I mean, that's kind of like, how do you walk, smell, and talk? You know, I'm proud to say that we're very proud of our companies that graduate. You know, we provide a market that graduates companies up to NASDAQ. And when they go to NASDAQ, they built a book with a solid group of market makers. So when they make that transition, their success rate is probably higher. And we move about 50 or 60 companies up a year, okay? Just a little takeaway on OTCQX. We did a study last year by Oxford Metrica. If you want a copy, I'll give it to you. We have some laying around, or I can shoot it to you electronically. 5 key takeaways on QX. Volume goes up over 50%. Value traded over 50%. Spreads narrow by 4%, and a 16% increase in market makers, okay? The biggest complaint I get from people that come on is, how do I get a market maker? How do I trade? I got one guy in, he's out, you know, I get dinged down. The question here is that we require that there's a market maker. I will get into talking about the 211 a little bit later. So, you know, institutions like it. We provide good transparency, good information. It's more akin in line to what an exchange listing is, but for 1/10, 1/20th of the cost. Okay, 2.5 million versus QX at 25,000. You tell me. You're a startup company, you're growing, you need to make a market, you need to learn how to be a CEO, you got to talk to investors, that's part of being public. How do you manage that process? How do you keep your costs down? We've created a really good model for people to succeed. Okay, OTCQB, our venture market. Okay, lower standards. We have a standard to allow companies to join, and we expect a lot of companies that are Reg A filers to exercise that process. You know, it's the exit strategy for companies that go public. You know, I want to talk for a second about a beer company that raised money in the UK and then just recently did a raise. You know, and I think it's a great company. I think the process is clean, but I call up the IRO and I say, where's the company going to be priced? Oh, it's not being priced anywhere in the market. Okay, can I deposit the shares with my broker? No, you can't deposit your shares with the broker. Well, how can I sell my shares? Well, you're going to have to do that privately unless you participate in the once-a-year auction. Okay, so I'm a guy. You know, let's say I make $100,000 and I invest $5,000 into that. Okay, my wife loses her job and I got to make a tuition payment. I can't wait till October. Okay, and if you're going to a crowd where you have non-accredited investors, you're going to have to think about why you want to have a publicly quoted market so people can get in and people can get out. You want to establish liquidity, ease and access. Elio trades like any other stock. Okay, the pink. Okay, I just want to spend 1 minute on pink. The pink is dark, penny stocks, shells, blank checks, distressed, bankrupt companies. These are the little monikers we put on as warning labels for companies. Okay, it's an open market. It requires the least amount of disclosure. It helps us educate the investor to know what they're getting into. There's no riskless investment, but you got to be smart about what you're buying. I mentioned Elio. Elio, I got a lot of calls about Elio, and you know, I showed the book. You know, it was the first online public offering, the first OPO. It joined on February 21st, 2016. The share price jumped up, jumped down. And basically what happened is it held at about $19 a share for a very long time until virtually this week. It was still trading well over its offer, 10 market makers. People are asking me, well, it's not trading, it's not liquid. Well, what do you mean by liquid? You have 6,000 investors. Where are you going to get 6,000 investors to raise $17 million? Guys who know how to do pipes and SPACs, you're going to get a handful of investors. Here you have 6,000 investors. Only 1,200 deposited their shares with a broker-dealer, and that's the only guys that are trading it. Okay, so we've traded well over 700,000 shares since the inception, but it's not really a liquidity event to trigger it. We have the mechanism for liquidity. The shares are available for purchase and for sale. The point is, it's a different type of vehicle. But we put it into a context where we can have a publicly traded market. Let me talk for a minute about Coastal Bank. So Coastal Bank, CBCO, a Reg A offering in February, they used the shares to make an acquisition of First Avenue Bank on April 8th, as already a quoted company. Okay, so how is this being used? Acquisition currency, employees, just like any other stock. That's success. I think Reg A is quite successful. Just those companies are still incubating and haven't gotten to the public market stage. Let's talk about how to get traded really quickly. This is where that 211 comes in. Okay, Just a couple things. Unlike an exchange, exchanges you list the shares directly. You know, you have an underwriter. Yoel explained the process in the previous panel. But you need one broker-dealer who must file, a registered broker-dealer with FINRA who must file a 15C211 with FINRA. What is that? That's a disclosure document and a request for permission to get a quotation and a ticker to be able to trade the security. Getting a 211 is a difficult process, okay? How do you get it? You know, for issuers that were coming to market, you know, they should have a relationship with an underwriter, DTC participant. Registered market maker can file a 211. It's a relatively simple process, but it's a complex clearance. Timing could take, they normally say 2 weeks to 2 months. We've seen some things longer, some things shorter, okay? That's how you get traded. So if you have a public account in your regular company, let's say you're a bank, okay, and there's a lot of disclosure on banks. They're not necessarily SEC reporting. A broker-dealer can read the reports, get the call reports, get the state filing reports for the banking commission, and file 15C211 to quote your shares, okay? And all of a sudden you have a market, okay? And then the individual broker has a 30-day piggyback eligibility. After that, any broker can jump in. So the mechanism of trading is quite a simple process. For Reg A, Hambrick filed at 211. There was a lot of stickiness in there because it was new and nobody had a solution on how to get it through. How do you squeeze it to the sausage factory to get it out to the other side? You know, DTC might not have been sure how to process it. FINRA, the broker-dealers, it's not in my WSP. For those of you who are broker-dealers, what's my regulation? How do I do it? What's a Reg A? You know? And I think what the process is that, you know, we mentioned clearing banks. There are clearing banks that take OTC securities. We have 9,700 of them, and a lot of them trade, okay? Know your customer is an idea with something to talk about with your brokers. So once you're traded, you're up on the market. You know, we try to work with our issuers early on in the process to get eligibility and clearance to become QX eligible. I think it's really smart to get involved as early as possible. I want to talk a little bit about Blue Sky. Some of you may or may not know what Blue Sky is. I'm not purporting to be an expert, but basically if you want to recommend, solicit, or advise any security to any third party, you have to have the ability to do that. Up until now, there's something that's called, like if you're an exchange-listed security on New York and NASDAQ, there's an automatic exemption for any broker to market those shares to anybody in any jurisdiction in the US. So I can, if I work for a broker-dealer, I can market the shares to a dentist in North Dakota, okay? But if you're not on an exchange, you know, how do you get Blue Sky satisfied? For Reg A, on the initial, you have exemption, but we're secondary share trading, okay? Can brokers market those shares or talk about those shares to brokers? So OTC Markets has actually gone out to the states and gotten exemptions directly from the states. So right now we're at 13 states. Believe it or not, if you can see that, those are all the states that we have. We use the social media pics. So Arkansas, Wyoming, Washington, Vermont, New Mexico, Rhode Island, Nebraska, Kansas, Iowa. These states have recognized OTCQX standards for distribution of financial and corporate news to satisfy the conditions so brokers can market those shares in a third market. You know, there's also a Blue Sky manual exception. S&P was in that business. They got out of that business if you want to top it up. But what's happening is that we're working with NASA to really get recognition across the board. Hopefully OTCQX will be fully eligible for all the states. There's actually 54 trade jurisdictions if you count DC, Guam, USVI, and Puerto Rico, okay? So Blue Sky is an important component to allowing for brokers to market your shares. What do you need to be a successful company? What is it? You know, I get the money, okay? I'm happy. I pay the fees, I'm not so happy. I create a market, I get buyers and sellers, there's some liquidity, it starts going. What do I need to do to be a good corporate citizen to the market? How do you increase your visibility? Are you disseminating information? Are you talking to investors? Are you doing non-deal roadshows? We have a visibility program. We created a corporate success team run by Bob Power and Mary Twist. We do videos. Those videos get distributed. We have a 25,000 distribution. We do a newsletter. We feature companies. We try to get visibility in place. We have investor relations firms that contact us. There's some of you here today. The process is, how do you get visible? Are you executing your business strategy? And can you get the attention of investors to buy your shares? Okay? this is really the aftermarket. What do you do to become successful? We've launched a few things and a few initiatives in our market that I think are probably worth mentioning really quickly. And I think that one thing that we can talk about is we've filed a petition for rulemaking with the SEC to amend Reg A to include small SEC reporting companies. We're talking about private companies today in Reg A. So if you're private going public, Reg A is a good tool. But what if you're a small company? What if you're a $20 million market cap company, and you need to raise more capital? Will this be successful? I really recommend, a lot of you have already written letters and comments to the SEC. This would be great. This will really stimulate capital raising for small companies that are already public and in our market. I think it's worth a mention, and I want to just close up with some of our highlights we've had for QX for 2016. We have higher data-driven standards, and we've really increased stronger corporate governance practice for all of our companies. With the prohibition of penny stocks, higher minimum bid prices, best practices, people can rely on the OTC QX designation as being a better market for transparency for investment. Access to research. We created a research portal, ACF, Sidoti, Edison. We've tried to verify the participants in our market to actually have them as qualified, okay? These are good sources of information. Sidoti writes great small cap research, so we want to vet them out to have a quick go-to list for issuers and investors for what they need. We've streamlined compliance. We have this sponsor program where you had to have a DAT or a PAL, the acronyms for the sponsors. We required that not only did they have to initially do that, but every year they had to renew. We've eliminated the annual renewal, okay? Because our bench in our market surveillance and compliance team has grown so much that we can take that on internally, okay? Regulatory recognition. I mentioned 13 states in blue sky, okay? There's only 37 to go, right? That's what I say, okay? Information availability, the compliance data file. I briefly mentioned that we send the compliance data twice a day to broker-dealers to help them categorize our companies, to help them alleviate how they evaluate our market, where it's easier for them to market those shares to investors, okay? Timely share data. We launched something called the Transfer Agent Verified Shares Program, and VStock was the very first company that jumped on board. There's a lot of problems that transfer agents have with securities when you kind of get down to that pink level. Companies aren't that transparent. They do a corporate action. They don't tell you what's going to happen. I don't know how many shares we have at the end of the month. I'm sure if you talk to Yoel, he'll give you a bunch of stories, okay? So we basically require that the issuers, and we do it in our contract, that they disclose on an as-needed basis how many shares outstanding they have. Shares outstanding, authorized shares, shares held at DTC, and restricted shares. We want to provide a transparency profile for those companies, so we get a file every month now, and we have a verified stamp on that from VStock. We have 3 transfer agents right now. We have 150 transfer agents, 3 transfer agents that signed up. I want to show you what it looks like. Basically, how can we provide good information to the market so they can actually be able to have confidence in investing in our stock. So we have this verified transfer agent. We have authorized shares, outstanding shares, restricted, no restricted shares, unrestricted shares available, but verified seal. If we can give you the best choice of how to make an investment by sharing information, making it data-driven, online, and social, then what happens is we can make you a better investor. And the last thing is the visibility program. Rachel, I want to introduce our team. Joe Altmans, who heads our domestic book. So all you guys who want to do a Reg A, you got to talk to Joe. Right in the back, I see Chris D'Ambrosio. Chris, give us a wave. Chris joined our team just recently, comes from a trading background. Rachel Nussbaum, who was working with our corporate services team for a year and now switched over to new business. Laura Hamilton, who's working in part of the region. I don't see Bob back there, but we'll make sure he comes out and you get to meet him. Listen, there's a lot of information I dumped on you. The bottom line is that, if you're going to go public, if you're going to go through a Reg A, you've got to have a trading mechanism. This trading mechanism works. I'm happy to take any questions. Thank you.
You said CBCO raised capital for an acquisition.
Can what?
CBCO. Raised capital for an acquisition.
Coastal Bank raised, they did an offering and made the acquisition. They did a regular offering.
Wouldn't that make them a blank check?
I'm sorry?
Wouldn't that make them an investment company or a blank check?
They're a bank. So Coastal Bank, we have a OTCQX banks tier, and OTCQX banks has slightly different requirements because they're banks that might not necessarily be SEC reporting. Okay, so they're not SEC reporting per se, and they can go under the exemption. So they're not SEC reporting. So as a reporting bank, meaning a state financial regulation, they are able to raise capital.
With a targeted acquisition before, or they raised and then decided which acquisition?
They raised and they made the acquisition.
It was all announced in the 1A documents in terms of the acquisition, the shares being issued for the acquisition.
Ryan?
So blue sky was in terms of, so that really, what are the remedies to that, and once you make the jump to the QB, how do you get over the 37 other states?
Well, there's a couple ways to it. We have recognition in 13 states right now when you join the market. Merchant, which is division of Moody's, has kind of a fast track document that can get, they're a publisher really. They basically publish your financial information, name, address, phone number, shares out, last 3 years, into the state securities register. That state securities register has a distribution to broker dealers, and that gives you an exemption under that. So typically QX companies that actually have the supplemental piece probably meet over 80 to 85% of the exemption in states, because every state has a population, okay? I look at California, it's about 30 million people, okay? It's an important target to go talk to investors. You know, how do you get an exemption? You know, we have automatic exemptions in those states I mentioned. So Illinois, you can get New York, Massachusetts. Some of those exemptions might require an additional filing, what I call kind of like a Department of Motor Vehicles filing. So once you get the securities manual, after a certain amount of time, you get more states and you can file into that. We actually have a person in our DC office, Gareth Colglazer, that can work with all the issuers in helping you get the states that you need to get.
Not just about QX, what about QB?
QB has recognition for 11 of the 13 states. Yeah, I don't think that Kansas, was it Kansas that didn't? I think Vermont. Vermont didn't recognize QB. Not that they didn't want to recognize it, I just think that there was a financial standard on QX that was met, but I don't have the exact reason why. But they can also get supplemental for that if they want to increase that availability to attract more brokers to market, solicit, and advise those shares, or distribute research on behalf of the company if there's research. So there's a couple of a la carte solutions here that can give you all the benefits of being public at a fraction of the cost of being on the exchange. So when and if you need to, at some point you can graduate. Any other questions? Any trading questions? That's
Can I get a copy of your deck?
Sure. Everything, just so you know, we're going to make everything available, and we'll get it to you. We're going to have it available. I'm happy to forward that to you. I have your card. I can shoot it off to you. But we're going to make everything available. And the information I have here is in hard copy. If soft copies available, everything we have is online. So if that's it.
If it's online, just get the full presentation.
Well, we have. Let me do this. Let me be techno savvy here for a minute. I'm really technically challenged a lot, so I've learned. On our home, we have a lot of great information here. If you go to Resources on Regulation A, we have a blog, and we also have Resources Guide. In the Resources Guide, at the top, we have a fair amount of news, eligibility for smaller companies, but some information on why it's important to go. I have the copies of the Ramp-On Guide, so for example, you'll pop up a document like this. So it's kind of a step-by-step, what do you need to do? How do you establish the security? We talk, a lot has been talked about the process of getting through Reg A. A lot of times when we talk to issuers, they don't have a lot of that knowledge, so we have to supplement that. But here we have all the experts, so we're able to talk just about trading. So the process is all here. The cost of QX is $25,000. The cost of QB is $12,500. Okay.
Say that again,
The cost of OTCQX is a 5,000 setup one time plus 20,000 per annum, and OTCQB is a one-time setup of $2,500 and it's 10,000 annually. Okay. I would say honestly that if you look at QX, with all the added visibility services we provide, we probably give you about $65,000 worth of service. Bob, could you just raise your hand for everybody? That's Bob Powers. He runs our client service. He does all the interviews that are on the home on the homepage of the website, unless Jason's doing it when he's not available.
Thank you, Andy. Yes, nice to meet everybody. If you have any questions about the great services we offer to OTC,
Sure.
take them at the
Great.
Could you go to the crowdfund meet?
Can I go to the crowdfund page?
Yeah.
Sure.
Just wanna, we're not taking a break, so we're gonna go on to the next.
Sounds good.
Yeah.
Doesn't want to open your page,
It
Sydney.
is, you just need to click it.
It's coming.
We have a lot of.
Well, I want to thank you and OTC Marketplace. We have another panel. We're not going to take a coffee break, so we go to the next panel. And so then we have a cocktail hours courtesy of OTC Marketplace. I want to thank you, everyone, who participated in this panel. But I wanted to mention about crowdfund beat, which I'm very proud of it. I founded the crowdfund beat about 5 years ago, and just out of the accident was just this crowdfunding was so new, and I was searching for information. I had people like Dr. Richard Swart, Brian Zankank, and Alternative Finance in Cambridge. So it was just for me that I get all the information. Now we have over 5,000 articles that you can go and search. We do a couple of conferences annually, one in Silicon Valley and one in around Marchtown, one in the Washington DC at National Press Club. And all the video, it's very professionally done. So anything you guys want to go and know about it, and it's free. You know, and I'm very proud of this. And so we have a lot of writers. We have people from the industry, from the, Doug Galanoff, from Richard Swart, from Jonathan Frutkin, Brian Korn, Jonathan Wilson, everybody, Blaine McLaughlin. And we have everybody that they've cut this. So if you have any opinion about the crowdfunding, Reggae Plus, we have a list. Just send it to our editor. I have Philip, and we are doing an annual report. So we're very proud of it. We're going to go to the next panel, then we have cocktail hour. Thanks again. Great, Andy.